We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back everyone to Capital Mindset Show and Dan Weston live with you guys here tonight to talk over some topics with you. Some of them quite interesting. You've seen maybe some other content creators like Strongman Personal Finance cover it. And Dan, I have a proposition for you. I think I have a product you might be interested in. I don't know if you're in the need of income these days. What if I could borrow money from you and you could give it to me? I don't know. Would you be 5%? I'll give you 5% a year.
5%.
Yeah, 5% a year. Are you cool with that?
That's it.
Yeah. Oh, but you have all this, like, I mean, I don't know what's going to happen, but you could have a lot of ups. You could make a lot of money. I could also, something could happen to me and then we may get nothing, but you cool with 5%?
Can I sell it if I feel like I have a better opportunity somewhere?
About that, it's not really liquid. But you get 5%. Did I mention it pays monthly? Did I mention that? I forgot to mention.
I like
that.
monthly.
It pays monthly. It pays monthly.
Can I see your financials before I buy this?
No. Yeah, I don't think that's on the cards here, Dan. Sorry, but pays monthly. Did I mention it has lots of upside? I think you're just not. You're ignoring the point of it has a lot of upside, Dan. Upside, monthly, passive. Did I forget a word? I think I hit the buzzwords.
Do I get to vote like at board meeting or investor relations?
You can vote for changes of the terms of redemption, but that's about it.
Okay, so I don't get to vote on anything about the company. All right.
Oh no, yeah, no, not non-voting. Yeah, no.
Sounds like that coffee company we looked at. I'm not liking this.
Yeah. Whatever you do not look at convertible bonds of other companies, please. Just focus. You know me. You know me. I'm on the screen all the time, so you can trust me, right?
Do I have any rights to redeem these bonds for cash, or are you forcing me to buy shares?
If it's below a price that I haven't told you how I'm going to determine, I will determine because I will maybe IPO. That's how we'll do it. I might IPO in the future, or at least that's my plan. And then you'll get stock instead. But if it's below that, I'll pay you back your money.
Well,
and
then I can sell the stock, right? I can get my
guarantee
money back, right?
No, but I'll personally guarantee it to you, Dan.
Oh.
You don't have to worry.
Then I'll get the stock and I'll sell the stock, so I'll be made whole or make money, right?
Yeah, unlimited upside.
Yeah,
uncapped upside. All right, so let's cut the act. So we just did a bit of improv there. We didn't even plan on doing this. Something like that. We just started to lay it on Dan, but he understood. He understood the mission. So what we just described, roughly speaking, is some of the things we're going to be discussing, and that's with Meet Kevin's convertible bond offering. The convertible bond offering was what? Monday? Was it Monday, or was it over the weekend?
Yeah, it was a special video, right?
Yeah, there was some video or something. Yeah, but we started off by touching on one of the points, which was, of course, the stated interest of the convertible bond. It's 5%. What? Something strange about that 5% figure. I don't know. How do you feel about that?
It's like basically it's like the risk-free rate almost at this point.
Over that 5% period. Yeah. It's kind of strange. I don't know.
But for like basically, yeah, one of the most speculative, risky investments you can make, you're gonna get 5%. So
And I have this, by the way, all highlights you see here, credit to Dan. So, but if do you want to start with the second page? What do you highlight here? What's going on here?
Page 2.
It looks like it's the stated interest. An issued principal $10,000. Each bond convert to $7,100 for shares of the company, non-voting common stock converted shares at a fixed price of $1.40 per share, rounded up to the nearest whole share.
So that's the terms there.
And so these bonds will presumably, right? I assume that, yes, the idea is he's raising capital very cheaply, mind you, 5% convertible, extremely cheap. That's something that, it should stick out for everyone. 5% convertible is extremely cheap. Dan, you found another convertible bond offering on the market. What were the rates?
Well, I thought it was convertible. The Phoenix one, it's just a bond offering to accredited investors. But so that one they were offering 9 to 14%.
That's not too dissimilar from what you would find in other convertible bonds. I know that some, convertible prefs will trade somewhere similar depending on the company in question. But that's the key point, right? Depending on the company in question, given its reputation, history, etc. Well, those are the same thing. The risk premium that you get on the or assigned to each of the fixed income offerings should be more or less in line with like what investors see as like riskier versus non-risky. So does this company have any, history, rapport?
No, they put that in the risks repeatedly in the filings that this is a new company, right? New organization, the PAFRAF organization.
Smart.
Yeah. What else they put? Oh yeah, the mini fund idea is unproven. Repeatedly is a risk factor in here. So even how he's modeled this business is a totally unproven model, if it can even work.
And it looks like it's upwards of 200 million, but then it's conditional upon the company raising the minimum of 30 million. So it's in between that amount. So whatever they can get, really, it seems. But if they raise under the 30 million, and actually you can see right there, conditional minimum offering amount, it's right there, 30 million. And then maximum of 200 million. So he's shooting for the stars here. So we'll talk later in this live stream about alternative investments, right, in the public markets that might offer better risk reward. But what was some other here, this part, right?
I just thought he has Chachki perks, right? Like coins, and you can do a day trip with them and stuff. It's just like whatever. You shouldn't be concerned about these things if you're making investments, people. It's not the point of this.
Mm-hmm. Yeah, you invest 20 grand, receive an exclusive invite for first ever House Hack shareholder meeting. Okay. And then if I invest $1 million, so quite a bit more, I receive a House Hack challenge coin vest for 1 day property hunt with Meet Kevin. Travel expenses, if any, once you arrive at to the company are included in a one-on-one 2-day consulting visit at your location, available internationally. So you get to meet him. You get to ask him a question about real estate. So is he, I guess I can ask you maybe some questions on this. So one of the parts that we kind of alluded to in our skit at the very beginning was the personal backing clause, right? So it's personally backed by who?
Kevin PAFRAF. It's at the bottom. We'll get there, but
okay. So I guess we'll save that. Let's go through the highlights here. So what's highlighted here? Shares outstanding. Okay.
Yeah, just some of the terms.
Due to transfer of shares, there's no public market. This is what you were alluding to in the skit. By the way, in the skit, we basically went over in a fun way everything. But yes, this is what you were alluding to about there not being a market for it. So once you're in it until the conversion occurs or they pay you back.
Yeah. So for people to make clear, you buy this, you have no say in, like, you just have these bonds. You can't do anything with them. they're illiquid. You can't sell them. You can't transfer them. It's specifically stated in there. You can't transfer them to someone else. You can't do anything until the conversion. And then we can get to you have no say in the conversion of these things either at all. You have zero say in any of this. So he can convert you to shares or they can give your cash back. It's totally up to Kevin. You have no decision at all.
This part's pretty standard, but it's also a key point when we're trying to make the case for perhaps not doing this. The investment is highly speculative and illiquid, as investors will most likely not be provided with a method to sell their bonds or their convertible shares until a potential market is created for the purchasing and selling of said bonds and converted shares. If ever, the company's goals and visions are tenuous and may very well fail. Investors should carefully evaluate the company, only proceed once they fully understand the speculative risks involved. This is all covering, right? This is correct, smart that he's doing, because it's all the proper disclosures that need to be done. So nothing here, by the way, if anyone's wondering, is, in my very baseline opinion, illegal. I think it's illegal. But is it, we are making the case of, is it a interesting opportunity? Just like any other stock that we look at in the stock market, any other bond offering that we look like in the bond market. What does this look like? So far, I think we don't even have to proceed much further than a bunch of the risks that entail just for the reward that you get doesn't make too much sense, right? So 5% for convertible. Of course, the caveat is the other side could always argue, well, the company has unlimited upside. I mean, who knows what it could be? It could be worth in the billions. It's like, yes, we have no idea. But we're talking about a fixed income security. So we kind of try to analyze it from that perspective. And then the other side of it is just completely unknowable. I can take any convertible bond and then just say, well, I don't know, Dan. The stock at by the end when it's redeemable or convertible, it could have 10x'd. It could 10x. Why not just buy? I'm going to buy every convertible bond out there. Why not?
So the other parts this is the part that you won't know. The bond gets automatically converted at the purchase price of $1.40 per share. So you got to ask, well, who decides if this is $1.40 per share? Mm-hmm. It's not publicly traded, so you don't have that information. So that's an unknown to some degree. Like, how is this going to be determined? Like, who's deciding that it's $1.40 per share? So it also says in the filing, the financials are done in-house and exclusively under the strategies of Kevin. So Kevin controls the financials and the valuations of this organization. I'm an auditor, people. This is very concerning. Like, he is controlling there's no internal controls here. He controls all aspects of this process. Oh, yeah. This should be very concerning to somebody that would invest in this. There's nobody outside determining any of this. There's no third parties at all.
Yeah, and this is equivalent of risk, like what I've seen some stocks pre-IPO when they're doing some employee compensation plan and they're doing stock-based comp with a stock that's not public yet. It's at a predetermined price, just like how this is doing it. And then the thing could IPO and the thing could just absolutely crater. And then there goes all your comp, right? Mm-hmm. There's nothing saying that the moment it goes public and you're actually able to monetize this, that, you're not going to get absolute wiped. So then you could get 5%. What is it for 5 years? 2030 starts the redeeming period.
Then it's the maturity is like 3 years after that.
Yeah.
So it's like 3-year period from conversion to maturity. Yeah.
So he could do it at any point in time from like 2030 to that period.
Yeah.
And, you're getting what? 5% for that up until that point. And then if it takes longer to convert, you still get your interest. So then even then your comp is like nothing. And then what happens if it IPOs and then just completely craters right there? It happens quite often, especially with these, unproven business model. We have no idea the leverage he's going to take. It looks like it's going to be a real estate investment trust. oh, there's actually a REIT that went public recently and kind of screwed its original shareholders the way it went public, but it might be actually a good investment going forward. And that's Sila. They did it like a, oh gosh, forgetting the details, but it was like a Dutch tender offering. And then at the valuation that they did it, it wasn't very favorable to some of the later shareholders because it went from private to public. So they didn't IPO in the traditional sense. And I recall that some of the investors were quite upset. So there's you're not being compensated. What I'm trying to make a point here is you're not being compensated for the risk that you're taking on. 5% is nothing, right? No. So if you're saying, granted, I still probably wouldn't do it myself, but if you were saying like 12% per year, we're starting to talk, right? That's more normal. It's more what I would expect. But yeah. And then you're talking about this one. This is what you were addressing earlier about the 140 per share.
Mm-hmm.
Yep, right there. And then converted shares may still be illiquid and could fluctuate significantly. I mean, he's just covering all his bases. Every disclosure you can imagine. I'm sure he had great lawyers going over this with him, making sure everything, all the dots were there, the T's were crossed, the I's were dotted. Going down, trying to find your next highlights.
Oh, I didn't send you the updated ones. Could you go 30? Go to page 35.
Mm-hmm.
So this part, I hope people understand this. At the top, that section,
yep.
You have no say in this company. So these, even the shares. So if you got converted, to make clear, there's no voting shares available to anybody. It's 100% voting shares controlled by Kevin. Everyone else in this, like the people that bought the shares of House Hack before, and then these bondholders, you have no voting rights of any sort in this organization. And I mean, that should be a problem. You should avoid investments like this, I would say. I am, in all honesty, I think you want to have a vote. You want shareholders to be represented by the board, right? So the board of this organization it represents Kevin because he's got all the voting shares. You have nobody on the board that represents your interests in this company. This should scare the hell out of you. And you should avoid investments like this. There's no one there to fight for your rights.
Yeah, typically too, within some bond offering or debt offering or debt in general comes with a set of covenants that a company has to, keep by. And the only protection you have is that there cannot be an early redemption, but you're getting a 5% return.
Yeah.
So it's not like I've looked at, we've looked at companies in the club about, that they had early redemption penalties, right? Because the rate of return was actually quite nice. So they would punish the company for an early redemption. Here it's the reverse. And your implicit rate of return is 5%. So, I mean, the protection against early redemption, it's like, wow, you're gonna cut me out of 5%. Darn. Oh no. Because you could choose right now to purchase, I think, a 5-year treasury and get roughly 5% right now.
Because why this would matter to people, let's say Kevin's like, I want to issue more debt. And I want to make that the top priority, right?
Mm-hmm.
Because right now, this is what do you call it? This bond he was claiming, is the top as far as if there was like a bankruptcy, everything else is subordinated to this debt. They can just put another debt on top of that. There's no one on the board that is fighting for you to say, hey, I don't want to, let's not do that, right? Nobody's going to fight to stop that.
Mm-hmm.
Kevin can screw you. And you got nothing, you can't stop him.
Nope.
No.
And it appears that, I mean, I don't have, it's limited visibility here. And obviously this is not information he doesn't have to share, but I have, since you don't know what the strategy is going to be, it's a lot of trust. And so again, trust implies some layer of, well, in this case, blind trust, that's risk. And so the risk is just not implied in the rate of return. I think, again, if we were talking something about maybe 12% plus, that'd be maybe more of a something to work off of, because here I have nothing but you'd have to have nothing but trust for the manager in this case.
You don't
'Cause I
know
don't-
you don't know what these properties are cash flowing.
No
Like,
idea. No,
You have no idea if he's profitable, which my thought was, why would you offer this bond if you were profitable, cash flowing right now?
what if he's going to go max leverage to the maximum potential that he could?
Oh.
He gets this amount of money, he takes the cash, and it's a financial debt of the business, and then we don't even have the mortgage debt to take into consideration. I don't know what the other side of it is. Maybe it's zero leverage. Maybe this is all the leverage that he's going to be using. He's going to be buying. Let's say he gets 200 million from this. He buys 200 million in cash, and then now the debt's only 5% on this bonds and whatever. I don't know. So I didn't see it anywhere, but yeah, that's something I don't know. And again, if you did, sometimes, or not sometimes, a lot of times it's not explicitly stated in other documents similar to this, but we're trying to make the case of this versus alternatives here. And so the alternatives that exist out there, a lot of the management teams have a lot of, track record to go off of. The companies that we can think of are publicly traded, and even the ones that are private, again, the yield's a little bit higher to compensate you for the risk.
Yeah.
So that's the case that I think we're trying to hit home again and again and again. It's relative to the risk. Doesn't seem.
Do you want to go to page 43?
I got you. 43.
Yeah. So if you go in the bottom paragraph, see the 25 million.
Mm-hmm.
So he has a $25 million line of credit with JP Morgan, which he personally guarantees himself, which I would understand because his business, this company doesn't have the assets for this. So he had to personally guarantee it. That is his personal guarantee, I think, to the bondholders that he talked about in the video. So technically, it's probably not even him. That line of credit is what he's claiming, I would assume, is the personal guarantee he made, which is a little awkward, I think. But
yeah. So he only has 25 million here.
mm-hmm.
And
which
then
for what he wants to do with this organization is not enough, clearly.
Yeah.
And that's all they gave him. So that's all like the snippets we get. And then page 51 talks about in-house bookkeeping. I'd mentioned
the company uses in-house employee for its bookkeeping, reconciling, receipt documentation. I think
I'm telling you, I'm an auditor. I really don't like this. If I was reading this, if I was auditing this, or like my auditor hat's on, I don't like this at all. This is a problem. In-house, and then just the way it's written, his way of doing the books.
yeah, that's
He's
a little weird.
Guy, he's the 100% owner. He's the CEO. The whole board is his people, and then he's running the accounting. Like, imagine the conflict of interest here. Why do you think there's a CFO and a CEO of an organization? People, why is the CEO not the CFO? There's a reason for this. So
I'm looking right now through the document to see if there is a third-party auditor.
They claim they had an audit, PCAOB audit, which I couldn't find, but
it's okay. There is a claim audited by a third party on page 27.
Mm-hmm.
Let me see. Document. Oh, it's in the risk related. Am I on the right page? Page 27.
Maybe search PCAOB. I think that'll come out. It's a different part.
Okay, here it is. Appraisals and PCAOB audit. I'm gonna look for the word third party because wait. third-party companies right here. The firm underwent a PCAOB, Public Company Accounting Oversight Board audit, and its going concern was removed. The audit found no red flags. So this is where it talks about. So we don't know who it is, but
You don't even know what was the going concern. You don't even know.
We don't know, but
there was a problem.
They don't have to tell
where
us.
it was fixed. So,
all right, so let's continue. We're at page 56.
The personal guarantee is on 58. It's really the last thing I noted.
Oh, and I wanted to show this one though. So Kevin owns right now, is currently 100% owner of House Hack shares of voting common stock. Mr. Paddock purchased all 1 million shares of House Hack voting common stock for $1 a share. Didn't he? He had a bunch of other shareholders that are non-voting. Yeah, right here, non-voting common stock. How much did they fundraise there? Right here, companies voting common stock are issued. So 47 million shares of non-voting common stock. Warrants of additional shares of the company non-voting common stock issued and outstanding. Wow, this man's on a spree. He's raising a lot of capital.
Mm-hmm.
All right. What was the other section you wanted to cover?
58.
58.
On page 50. It's like the last thing I noted.
It's right here, 58.
Personal guarantee.
So I know there's something in here. When I read it first, it was like if something happens to him, personal guarantees off. It's fairly standard because it's tied to the person. It's not out of the realm. So presuming he wants to live, he's not going to do anything to himself. So you don't have to worry. I don't think you have to worry about that risk.
So, but it's like he guarantees the asset, but it says right there, he will not provide disclosure of his financial standing. And he has no obligation.
Mm-hmm.
So he guarantees the assets. He has no proof if he can even compensate you at all in the future.
No,
and you'll never know. He, like you say, he might just lever himself up and just all blows up, and you don't get anything.
Yeah, and I think it gets right back to the main point. The key point is relative to the risk, regardless of what you think, it doesn't appear like a very good risk reward whatsoever.
Yeah. Because like if you bought a treasury, you're getting the money at the end, right? Like that's what people should pay. Like this is like you tell us whether you're going to get your money back at the end of this, because I don't know. Oh. I would say it's way less than 50% chance.
Yeah, and as far as like track record goes, as far as capital allocation, I mean, there really isn't. There's not much to go off of because we know that prior to him launching the fund, his PP fund, which was near the bottom of the market, so it's kind of he had turned about 40 million into 10 million, roughly speaking, and of course he deleted a lot of videos. But for those of you who watched him from way back when and remember, he had a $40 million portfolio at the top of 2021. He lost about half of it, and then he timed the sell. He came out with the tweet, "I ain't leaving." He's famous for saying that. And then he went all in Tesla in the summer of 2022. And then by the end, he sold that again, roughly lost about half of that. And then he was at 10 million. So that's how you get from the 40 to the 10 million, by the way, if you guys are wondering. Because again, he lost about half of it all the way through, the beginning of 2022, did the timing of the market. I'm repeating the story again, just in case people, were like, wait. And then he got back all in Tesla, where there was like that Tesla roadshow day. He went to see the factory in Texas, and he was really bulled up on Tesla, went all in Tesla again. And then he rode it all the way down about 50% from there to get to roughly where he was and where he started PP Fund. And then from PP Fund on. So that's so far as my what I've seen is track record. And that's what just with stocks. And then I don't think the PB fund, based on what I've seen, is like going to be a strong outperformer by any stretch. And his strategy is very strange, especially like the way he played the mortgage boom is actually really interesting. I'm not even sure he understands the structure of rocket companies, because he made rocket companies pretty large. And I've done videos on like the structure of rocket companies. Rocket companies is a very weird stock. It's not something I think it's what a retail investor should really be too excited to get involved in. It's one of the more questionable structures I've seen. So it's a VIE. It's an American VIE. But of course, I'd buy that over a Chinese VIE. Hands down. Like, never, if I had to pick one, I'd of course choose Rocket.
He's almost turned his ETF into a sector rotation ETF strategy, where he's trying to just pick the perfect like composition of like investments for whatever the market conditions are. Which those ETFs exist out there actually. Some of them do okay.
Yeah, I'm looking at, and this is so I'll share. This is his current performance for year to date. So yeah, he's not doing so hot here. Again, like Dan says, he's a sector rotator from the memes. And it looks like he does take a lot of like high beta plays, but you guys know about me, Kevin's recent fumbling on TLT. No, Rob, you can help me out because I don't have like a magnifying glass on me, Kevin, so I kind of will occasionally search him on Twitter, and then he'll have a macro take, and I usually try to do like a quick little react because he's always predicting the macro downturn, and then it's always like the opposite. That there was by the way, for context, literally around here, he tweets out something about the sell-off begins. I have it recorded on Twitter, and then I had a weekly call with the club members, and I was saying, he was the contrarian joke indicator, right? That's like, we're not seriously making a decision solely based on him, but it was one of the things I was like, well, when this guy is panicked, go long beta. And then we did like a weekly call. I have it titled literally "Go Long Beta" in April, and then the market proceeded to do really well. I think he kind of flip-flopped and repositioned, and he also, I think, well, you can see here, did really well, and then subsequently kind of collapsed. We didn't collapse at all. And then since then, it's just like, I don't know what the hell's going on. So maybe he did something with TLT and he took this position where he thought rates were going to come down, but he misunderstood that short end of the curve is not the long end of the curve. And there is a distinction and a separation, and there's a nuanced approach to analyzing where rates are going to go on each part of the curve. So, but Rob, I assume, Dan, do you know this? Did he go long TLT?
I don't know that.
Oh boy, if he went long TLT.
Is that new?
Let me see what his current positions are. Because Lord. All right, let's see. Top holdings. All right, so I see.
So now he's a bond expert now.
Yeah, I see bonds for 2034. Oh, yeah, he's got some really pretty long dated bonds there. 2054. He's got a lot of fixed. Okay, so he took the complete opposite. Yeah, he is very poorly placed for this. Okay, so I can see what he kind of did there. So effectively what he's done is he looked at where rates were going, the short end, just like the Fed announcements, and was like, wow, the long end of the curve is going to crash. So he went really long those ideas. So real quick, Dan, right, we talked about this in the club. What kind of companies really benefit from the 30-year coming down? Things with mortgages, which like mortgage originations.
Yep.
So he went long Rocket. He went long UWMC. And then he took like a leveraged long bet because those are at least operating businesses that are producing cash flows or earnings in the now. Although the growth might be hampered, right? But then he took a leveraged bet by effectively, and by that I'll explain what I mean by what a 30-year bond. It's a leveraged bet on rates, because it's going to be more sensitive to changes in interest rates than a shorter duration bond. I feel like for our audience, they kind of know that, so I won't get into that too much. Oh, okay. Rob's giving us the context. On calls.
Oh my God.
Hey, Dan, I think now we can talk about it because it's not as like degen and people can't copy it. But remember what we did?
Yeah.
We can talk about it now. It's fine.
We did contracts on TMF.
Yes. So
Very short-term contracts.
we did very, very short-term contracts on TMF. So we had the same idea, except completely different entries and exits. Because this man, I assume, Rob, did you know what the expirations were by chance? That could help us out a lot with the context here and kind of figure out. And that kind of explains why the performance may be getting clapped. Because, yeah, if he, oof. But not to bear the lead. Yeah, Dan was referring. We did contracts on TMF, and we did it to the end of September, but we didn't even hold it throughout the whole September. We held it for what, 2 weeks? Not even.
Yeah, because there was like 3 catalysts.
Yeah.
I think we got to the second one, and it just ran. It was time to get out. Like,
yeah. We identified 3 predefined catalysts regarding around some release of data and how that would probably affect at least speculation in rates. And I think that's what Kevin was seeing. So then he was like, this is going to be a sustained rally. Dan and I didn't even know if it was going to be sustained or not sustained. We just kind of wanted the quick directional, move.
Yeah.
And
we were ready for I think we just went to the end of the month.
Mm-hmm.
That's all we did.
But we didn't hold it till the end of the month. I think we were out by close to mid/mid-end month, but not to the end. So we didn't hold anywhere near expiration. So yeah, you're about to go live or something. No, but if you know what the expiration on those contracts were, we could kind of proceed from there, because that'd be pretty interesting to to kind of think about. So
he was a real estate expert, then he became a stonk expert, right? And then he became a bond expert, apparently.
Yeah, he's
wow. What a renaissance man. Yeah.
Oh, I seem to have lost it. Let me go top holdings. There we go. So this is what I was looking at. So you see, like, he's basically hyper leveraged to rates coming down, right?
Mm-hmm. I mean, what are they priced? 200 basis points going down. How long?
Yeah,
he could not do another rate drop until next summer.
And it's like, it's not even, people forget this, that rates towards the short end of the curve are heavily influenced by the FFR rate, or I said FFR rate, rates in the word, by the FFR. And the longer you go out, the less impactful the FFR is. FFR, by the way, is federal funds rate. So what he's doing is he's going off of what the Fed is going to do, and that's somehow going to have an impact, because the longer you go out, the more it's just impacted by market conditions, or not market conditions, but market participants. There's a bunch of factors now come into play. What do market participants think that inflation and growth is going to be? And if they think inflation is going to be much higher, they will demand a higher interest rate. And what does that mean for your bond value? It goes down, right? If you hold it currently. And then if you think growth and inflation is going to be muted and lower, then you should see the yields on the long end start to contract. And then subsequently, if you're a current holder, you'll get some appreciation from that. So he's making that bet, right? And I think he made that decision just off of thinking what the Fed's going to do, which is like not what you're supposed to do when you're looking out the long end of the curve. Anyways, the Fed follows a 2-year, and then everything else basically smoke and mirrors. Oh, Ben. Oh, he. Ben's question really gets down to it. That's the rabbit hole. That's the rabbit hole. Don't trigger my autism. In a good way, because we'll be here for a while. But you bring up a good point that begs the question: is who is the follower? Absolutely. That's all I'll say. Who is the follower? All right, Ben. Who is the follower? Wait, I'll quote iRobot. That detective is the right question. All right, Dan. Do you have anything else to say about me, Kevin?
I don't know why you'd buy this bond thing, but I guess if you believe in Kevin, why I don't know why you wouldn't have just bought the shares. I don't know why you would bother with this.
FOMO, bro. I missed out. Now I need to get in another way.
He's trying to get the income bros, right? The people that want income. So, but lack of control, like any investment that takes control from you, I have avoided every investment like that in my life. If you tell me there's an investment that I lose any sort of control, like lock-in rates or anything like that, I'm out.
Mm-hmm.
I don't know. Like decision-making ability is important, I think. If you think you are good at investing, you should never take an investment that takes away that from you. But
Absolutely agree. All right, so I wanted to ask you, and this is now, I want to know about some housing stocks, Dan. On the theme of housing, are there any housing stocks out there that you're currently invested in that you thought presented an interesting opportunity?
I guess it's two primarily. Like not talking about big box stores.
Mm-hmm.
That's not really a housing. Like put that aside, people. Like, but I'm into home or Simpson Manufacturing and Master Brands. So it was going to be a third one, but it got bought.
Simpsons Manufacturing. So that one's the one that's you said it got acquired. It's gone.
No, that was the Hurricane Window Company.
Hurricane Window Company. That's the one that one is the one you keep saying it would have been, as you say, perfect.
I probably would have. I'm not joking. I think I would have doubled it with what happened this year. It would have just freaking been perfect. But
oh, sorry. This is also a good point. Yeah, but we'll leave that. But yeah, just so everyone can read this. This is a true story.
The problem with housing, the problem with housing investments that people are going to find, a lot of them get bought up by these like conglomerates. So you'll have an interesting product in housing, and just at some point, usually there's these conglomerate companies that just buy up brands in this space, and they just acquire them. And then sometimes they spin them off later on, but that's not always the case. So it's difficult to find like an innovative product company in housing that's like kind of very specific and separated, that and then hasn't been bought out. But and then the problem too is they have to maintain that focus. You don't want them also. Some of them start going on merger acquisition sprees, which is a problem, I think. This is a very tough space to do investing in, honestly. Housing and housing related suppliers.
You know, and there's something to be said, by the way. Did you know that when you kind of judge the general business cycle, one of the earliest parts of the business cycle that begins to break is manufacturing. Yeah, I think I'm going off memory from the academic days. It's like manufacturing, housing, construction, and then it trickles on down. I forget in between. There's a few in between, and then like towards the end, it's like services. Oh, financials is before services. That's like traditionally how it goes. And you know what's interesting? That's like for traditional business cycles / recessions. We saw some weakness in manufacturing, right, for new orders. And more recently, we're seeing at least some market weakness from housing.
Mhm.
I'm not trying to make a claim there, but maybe I'm leading like with a potential claim there. But
It was funny to see the last like 2 months, like all the housing stocks kind of ran. And I'm like, I think people are getting ahead of themselves here. Everyone keeps thinking like, because they were saying next year's the year it's coming back. Next year with the rates goes down. But when you dig a little deeper, it's like it's more likely next summer, fall, not like in the spring. So you've seen a little bit of a sell-off with some of the bad data on housing coming out the last few weeks. You can see it there too. They kind of drop, but
yeah. Oh, there's the word for it. Yep. Housing starts durable. Yeah.
you want to know, here's what kills me. I looked at this company when it was $70 a share.
Womp womp.
I didn't, but I bought it 120. So I did
no.
okay.
Damn.
I was looking, yeah, look at that shit. I was there and then I waited and then I bought it on the dip, whatever that second
Still
dip.
would have done better with NVIDIA.
Fuck it.
Still would have done better with Carvana. What am I saying?
I know.
Carvana.
We're all just clowns to Carvana.
Dude, Carvana.
We all live in the shadow of the coin car company.
I do all that effort, right? All that effort, all that endless research, and I'm losing to a fucking potential scam. Like, what's going on? Markets are perfectly efficient. I said potential because maybe I just can't see it. But damn, it's like, wow.
But
Nothing feels good when you just look at your performance. Doesn't matter how good it is, because if it's not as good as Carvana, you're just like, bro, what am I doing?
What I thought was interesting, like this company does all the hurricane strapping that you can think of in your houses down there. It's probably Simpson manufactured. And some people might have thought, well, anybody can make a metal bracket. It's like not true. These are engineered brackets. These are engineered hard. When what they put in your house, like stricter standards. It has to be made a certain way with a certain type of metal. Like, so somebody in China can't just replicate those straps. And if they did, you're an idiot for buying. You got scammed. So climate change benefits them, you would think, because more areas exposed to hurricanes and flooding will need stricter building standards, which means more specific engineered fasteners, not just nailed. You're going to need more, like, and you can Google and see what I'm talking about. People like the rafters of your roof, right? There's like a metal strap you can get to keep your roof from blowing off, or the bot, like for the framing, you have them, right? Whatever they're called, tie down. For the houses. So,
and a quick question for you in all these housing stocks. So there's this one, right, that you've shared with us. How do you feel about the suppliers, so to speak, like builders first source, top build, etc.? Do you think
they scare the hell out of me? They're intriguing because you figure it's like right, like when housing goes, the suppliers are going to rip with it.
Yeah,
they're going to be the first ones to benefit from when housing actually does recover. The suppliers, like builders first source. But there's nothing like patented. There's no, to me, it's just like they don't like have a defensible product.
Yeah.
I guess their business is the defensible part, maybe. I don't know. Once they get to a certain scale.
Yep.
Like they just have efficiencies of scale at a certain point, but like, I don't know. They just, we were talking about like how terrifying it would be to own builders first source. And then it dropped like 8% the next morning. And it's like, yeah.
And a quick question for you, like, or more of a description for the audience. So when something like a builder's first source, when you look at it, and let's say commodity prices for lumber, which happened, this is, telling the story. If it rises rapidly, builder's first source is able to capture all the benefits. So, kind of think of it this way. They're able to source lumber at X price, and sometimes they have, pre-agreed upon prices. And then who they're supplying to, they may be at higher or elevated prices. So then they're buying it over here for less and then selling it over here for more. And then those contract renewals could change more quickly than where they're getting their supply from. So then Builders First Source is really able to expand those margins in an environment where you have rapid increasing in the commodity price, which you kind of saw with their operating margins. Their operating margins just like absolutely flew up through the roof. That will start probably normalizing, and I think I agree with Dan here. It's like they're kind of scary. And I think it's expressed in the volatility. Like this is actually one of the most volatile stocks I've seen in housing. It's extremely volatile.
Like the market is telling you something by looking at this thing, the way it goes up and down. Ugh.
Yeah, it's yikes. So with Builders First Source and Top Build and all of them, there's also like you got to analyze the concentration for business type, or not business type, property type. So you have commercial, residential, right? To kind of think of a few. There's one that's going to be more commercial focused. One's more residential focused. One's going to be maybe focusing a little bit more towards or tied to lumber. Another one's going to be tied to something else. So you got to look at the nuances between them, but they're all doing the same thing. They're all serial acquirers. They all repurchase their own stock. So they're also share cannibals. But yeah, probably gonna, I think with at least Builders, I wouldn't be surprised if margins start to normalize at some point. It's been a fantastic performer for the past 5 years. So you can't really complain.
I think part of their success might be why Home Depot is getting in the space too. So, because Home Depot, right, they acquired a supplier.
Mm-hmm.
I think roofing, I think it was mostly roofing materials, but so you're going to have Home Depot competing with them now.
Oh yeah. I mean, Home Depot Pro is completely overpowered in the space.
Yeah.
I mean, they benefit from the Home Depot scale. And Home Depot is a really well-run business. I think that was like the point of why you were bullish in Home Depot way back when. Like over here, a lot of the really exciting growth, like you had the thing that you could notice, which was the stores, and you liked the stores. But if you actually look at the chart where they stopped growing stores, you've seen that chart? I got to find it. Like people are saying that Ulta is going to be like them, but I don't think I think that's a false equivalence. But Home Depot hasn't grown too many stores. There used to be a rapid expansion way back when with Home Depot, but then it stopped. But the stock price has done really well. Where did the growth come from? Home Depot Pro, which is an amazing business.
Changing product lines, more efficiencies with the stores. So yeah.
Great company.
I only bought the stock because I went to the store when I was like younger, and I'm like, this store is really nice. It's so easy to shop here. Like, I don't know.
Yeah, you see that
Peter Lynch intensifies sometimes.
Yeah. Have you ever seen like that marketing tactics about when you have a store? You know, that's no secret. Home Depot primarily understand their customer base is mostly male. And then males want a store to have like the clearest direction, right? You're like, this is where this goes, this is where that goes, this is where that goes, right? So when you go to Home Depot, you know where things are, right? More or less, you can find things. Because the customer base is more mission driven in that sense. Because that's a thing, right? Where you design the store, and even shapes matter. I'm not going to bore everyone with that, but different customer base, you'll have a different shape design for a store too. Like you'll have more round shapes or more sharp shapes. For males, tends to be more sharp shapes. Tends to do something to our brains. It's all subconscious effects.
But I mean, even like you said, the layout. Home Depots are laid out differently in different parts, right?
Mm-hmm.
The state, the rural ones, the suburban ones. We have a city one actually, which is kind of unusual. There's one right in the middle of Albany, so. But they're all laid out differently. So
yeah. Costco is different. Costco is the treasure hunt. The treasure hunt style, which also really works well for different reasons. But yeah. Is there another stock you wanted to cover?
I think you want to cover it for some. I talk about it all the time. My cabinets.
Do you open it and close it?
Yeah, I have to, right? Every day, open it.
Would you be mad if I slammed it?
You slam it?
Yeah.
What do you hate about it?
No. Just slam your cabinets. I don't know.
Well, they have the slow close feature. So
Oh, so you can't slam them. What's the ticker on them? MBC?
yeah.
All right, so talk to me about these guys. What are they? Pretend I don't know what they are.
So this is the company that sells they have a huge market share in America of the cabinetry business. So they're focused exclusively on cabinetry. So that's all they're doing. They're not trying to branch out into different products, which some of these home builder or home companies will start doing. What else? So it's interesting. They were part of one of those conglomerate companies I was telling you about. Is it Fortune? I think it was Fortune. So they were under one of same company owns like Master Lock and stuff. So they split it off at some point. I think it was a year ago, which usually is a sign that shareholders within the company, they saw something special about this brand, right? And they want to unlock that value. So they acquire these brands and then they split them off at some point. So what I think the market was punishing them when I bought it, because it was less, they had a huge amount of debt, and a lot of people, there's no nuance sometimes with debt. Some people I think literally just invest using financial aggregators, like certain Twitter people we see. They just look at like certain ratios and that's all they care about. But the debt wasn't caused by them like being poor at management or, not making enough money to operate. They had to take a loan out when they separated from the parent company to pay them. They basically like paid $700 million to split off and form their own company. So this was never public, and it wasn't like an IPO. Like they just gave shares to the people that own the parent company. So their original plan was they had all these small parts of their business were like all these separate little manufacturing hubs, and they've kind of brought it together. And they've uniformed the manufacturing, simplified their process. So they've gotten some margin and efficiencies improvements. I don't think there's much more. So that's good. Now it's more of like just they're at the point they acquired another business. They're getting themselves positioned to benefit from this housing boom next year, hopefully. So that's kind of where you see them, like the moves they made. Like, I don't think they would have acquired that company if they thought the housing revival was coming soon. So I think it was an opportunity that presented itself in the conditions. They also have improved their manufacturing. They said in their calls, like the CEO, very clear, they wanted to improve their efficiency or how much they can produce. It's like preparation right now for increasing like their volume. So I like my chances with it.
Yeah.
So it's a risk, right? They're in the right place at the right time if things go the way I think with housing next year.
And you think housing volumes are going to increase, like sales volume?
Yeah. And they benefit because the one thing I was concerned, like everyone talks about home builders is always so popular on YouTube, but home builders only benefit from one type of real estate, the new developments, which now you're bringing in like political risk. I mean, you have like political risk with that. Like people can just decide they don't want any more. The zoning boards can just say, no, we're not letting any more things get built in certain parts of the state. So that's a big problem up here in certain areas. They just won't let housing get built. So like this company benefits from, I showed you like the pie chart. They touch all the different parts of real estate. The wholesale business, which is, they call it dealers. They sell the big box stores. And then what was the third part? Direct sales. So to the home builders. So.
And then how do you feel about the other kinds of businesses that also benefit from like an upgrade cycle, or not an upgrade cycle, a repair cycle, like a Beacon Roofing?
Beacon Roofing, I don't know what to think of it yet. It's tough. It's very interesting, but it also kind of became a meme stock for the hurricane, which scared me because it spiked when the hurricane came in. It was him and Generac, right? Because everyone thought they're going to get this big boom of business because they got Florida. They bought a bunch of Florida businesses. So Beacon just got into the Florida market. I think it was last year. So people are thinking, oh, this is the perfect company for fixing all these houses in Florida. I don't know though. I mean, You could see like there's the hurricane run up.
Was this the hurricane run up, or was it that like here?
It's probably that one, I think. That peak. Those are probably the two hurricanes right there, honestly. Those two.
Yeah, so it was up 8%. I mean, still
That
down.
doesn't mean it's not a real company. I haven't looked into it further yet. It's interesting. I know they're a serial acquirer, so they're one of those. That's how they're expanding, kind of. So you got to think those types of companies in this space. You got to really think long and hard about, because they can get in trouble real fast if they're buying with debt, right? And they're not. And you have to try and keep up with all these acquisitions and make sure they actually are working out. But some of these CEOs in like housing, they'll just keep buying things, and you don't know it's failing or succeeding necessarily right away.
Yeah, revenue keeps going up, but they keep doing acquisitions. Yeah.
I like that they seem to be focused on roofing. From what I read initially, they're not like expanding in other product lines so far. I think that's positive. I think stick to roofing, but they're kind of interesting.
I didn't know they were offering super passes. All right, well, he wants us to talk about Disney. He's been asking for a while, and I see another question about Pool Corp. But Disney, don't worry, Boba the dog. Do not worry. We were
Disney people last year.
Yeah, we did have no, it was like early this year. It feels like last year. That was this year. Yeah.
I just remember I bought it like 80 and sold it like 110 or something.
Yeah. I went on vacation to Aruba. I remember when I sold it. I got a text message, and I have the sale receipts, right? So, but I get not a text message, a message from one of the club members. It was that he lost the proxy. I remember where I was. I was at like the bar in one of the islands, and I was like, all right, with my drink in my hand, I was like, sell this thing.
I don't know.
That was a funny moment.
I mean, they are going full bore to try and increase like cash flow and profitability. Like,
yes,
they're raising prices on everything across the board right now. I don't know.
Well, the parks is great. I mean, the parks has been great. That's not the question. And I have a tweet about this, right? Where I can't show because it'll be South Park and I'll get copyright. But I just say go to my Twitter. If you go scroll down enough, you'll see like a tweet with like South Park scene and then Disney. The premise of it is just making fun that Disney took the IP of Star Wars. They spent $200 million on this one show. 200 plus million, I'm told. I'm told it was greater. And they had to cancel it because it was so terrible. That's the part. That's the issue, Bubba the dog. The parks is like not an issue. Like that is run well. That has huge success. And I mean, going forward, it might like cool off a bit potentially. I don't know if consumers slowing down, but and the hurricane and all that. But the point is, the parks has been doing fine, and it's actually been the gem. The media business is awful, awful. Like they have great IP that's carrying them, and they're like trying to fail. Like at this point, I just have to assume Disney. If anyone from Disney is watching, you guys are trying to fail. Like you're literally like Netflix. You're coming out with all this and you're defeating us in the lineup. So out of the top 10 shows, we can't even get one on there because we're actively trying to fail for whatever reason. So it's pretty abysmal. It's embarrassing at this point because they have great IP. There's no doubt. It's just I don't know what's the equivalent of like, a sports analogy. Like in football, it's like you have the ball, you're like 5 feet away from the touchdown zone, and then you're just like, what would you do to try to fail to throw the game? Run the opposite way. What's the worst thing you could do? Run the opposite way. Where it's like almost like obvious you're trying to throw the game.
So they're like a football team with a bunch of stars, but like not like they have a bunch of Pro Bowlers, but then they don't have like those other guys you need to actually win. Like I don't know. Like it's an interesting collection of products, but I don't know if I really see it again. Like when we bought it, like Iger was coming back. There was the narrative of profitability, right? The path towards profitability, that story-driven line. I don't know. I don't see it right now. Like what's going to cause the stock to go higher?
I think it comes down to sort of like I maintain this idea that tomorrow Disney could decide off the drop of a hat to be one of the most profitable media companies that we've ever seen. Tomorrow, they have so much incredible potential. But if you really see like the drop off in like the Marvel profitability for their movies, it's starting to show. They can start milking older franchises, but there's only so much you can do of that. Subscriptions, they have like a stable part of the audience that's there was a let me find this chart. I will try to find it because wow, it really hits you when you see the Disney versus Netflix growth rates. Hold on.
You can give them though. They're besides Netflix, Disney is probably the only profitable streamer, right?
Yes.
Because they did cross that threshold finally. Because they kept raising their prices recently.
I will try to find. It was really insane to look at. I should have saved this photo. I knew I was going to want it eventually. Damn it. So I need to just start saving a bunch of photos and like cataloging them like Kiwi Sam, but like stock related stuff, not what he does. It's like feet pics.
You know, it's fun. When I was at Disney, like the Lightning Pass, the way they were doing it, I thought it just sucked. Because you could pay for a Lightning Pass, and then they would give you like an hour to like ride the whatever ride you wanted, and that was it. You had no say in that. Like they're like Tron's open from 2 to 3, and then you either pay to do Lightning Pass or you don't. So I guess the new one they're switching to is like what Universal was doing. When I went to Universal, that like the new Lightning Pass is what Universal has been doing. You can either you either got the Lightning Pass once per ride, or you did the unlimited one at Universal. So they're kind of doing the same thing.
Oh, I think I found it. No, it's this chart, but this one only goes to 2022. There was the new one. Nope. I'm trying to. I thought I found it. No, not it. Wait, I think this is. No, this is not it. Dang it. Anyways, I'll describe what it was. Basically, it was showing Netflix just like destroying everyone, per usual. And then Disney's kind of tapered off. HBO's kind of tapered off in growth. And the other ones were like kind of just doing their thing, also not very significant. So the Gathering's coming out with Marvel cards. Oh my gosh. Well, you know, for Hasbro. So anyways, final question, Dan, are you buying Disney?
Not at 96.
Yeah. Rob's right. Just hold Netflix and chill. All
the other thing you're gonna have to live through if you're gonna buy Disney now, you're gonna live through the park renovations, which is gonna affect attendance because there's gonna be people that put off their Disney vacations till the renovations are done, and then you have this huge capex cycle coming. All the outlay cash. I don't know. Like you could wait. It's like Intel. Like why not just wait? What?
Yeah, I mean, you shouldn't go off of past performance, not future results, but like at the same time, wow.
That's amazing.
Wow. That's crazy. So
Can you imagine instead of the streaming services and all the acquisitions they did, if they just became a licensing hub for all their properties?
oh, no,
How
for
much
sure.
more valuable they would be today, right? Because it
Mhm.
would all be like pure profit. They would have just licensed Disney to all the streaming services that came out. And everyone would have it, I'm sure, at this point. So they wouldn't have to
Yeah.
spend all that huge money on streaming, data center costs and all that.
Cloud and stuff. Yeah. Yeah. I'm surprised one of them isn't going to do it. If any of them are going to do it, it's probably going to be some of the ones that are on the lower end of subscribers, and they might just turn. Well, some of them are already doing that. What am I saying? Paramount and Warner
Paramount's probably going to go that direction, I think.
No, because Warner Brothers has pretty much, they have a lot of their content that's available to license out. And they have a great catalog too. I mean, they're the ones who have Friends that they were profiting of a show from like now what, 25 years ago. They were making like 200 million a year sometimes on just like giving that out to Netflix.
They were playing the volume game on content, but it's like the quality of the shows. If you get those hit shows, like you just constantly making like friggin' money on it. Like Dexter, still right. Like I think it's still being licensed. Show's been gone for like 12 years.
Yeah. There's some shows out there that just like cash cow for a very long time. But I maintain like Disney has a lot of pent up potential. Like that's always been my opinion. They could change tomorrow and decide to make a ton of money, but the culture that's there is very problematic and is probably going to get in the way of the change that's necessary to make that happen. Their content, it's nothing to really be proud or impressed of. There's some creative directors in there that are good, but they're quickly snuffed out by the talentless ones that are there for unknown reasons. To be honest, I have no idea how they're employed. So, all right. So, McDonald's, you have a lot to answer for, buddy.
Do I?
Yeah. What happened?
I'm so scared.
Dude, you're in shambles. You're ruined. It's down. It's down to just under $300.
Oh,
look, Dan, aren't you scared? You're in shambles, Dan. Look.
Oh no.
Oh, as we get out, look. It's over. Wow. Will I even notice this drop tomorrow? Oh, probably not.
You know what's funny is like they've already, I read their statement. They've already pinpointed what food product was contaminated, what restaurants are affected, in what part of the country. So they've already been able to isolate it within half a day.
So was it the fault of McDonald's corporate or the franchisees? That's what I was curious on. So
they're saying like supplier of onions.
So it's a supplier.
That's what it sounds like.
Okay, so it's not McDonald's. Supplier of onions. All right, they need to get it.
Because the first statement came out, person died getting E. coli from McDonald's. And it's like, I'm always like, okay, are you sure about that? Like, was it accurate? And then turns out it's just like one product that wasn't even directly from them.
Yeah. I agree with, I don't know this because I have never tried actually McDonald's breakfast. Actually, lie. I've had a McGriddle once.
I got to say though, I ate 2 different restaurants in Orlando for breakfast. Really good. You got some good breakfast options.
Oh yeah. Hey, no, we're getting better and better. Tampa also has some good food, and then Miami is just expensive food, but there's good food down there too. Because those are the 3 cities that are my current triangular home base. But
you gotta do steak, egg, and cheese though at some point. Just experience the grease.
Do they do breakfast all day? Because
no. They did for a while. Well, actually, they did experiment with like a few sandwiches all day. I don't think you want the egg at like 6 o'clock. Might have been sitting there since breakfast. You don't.
Oh. They do that for my own protection. That's why they do it.
Yeah.
McDonald's isn't doing it to make your life hell. They're doing it to protect you.
Mm-hmm.
That's funny. Oh my goodness. The OP ripoff compared to 10 years ago is fake AF.
But I have been thinking about starting to sell McDonald's shares. I think I mentioned that like 2 weeks ago or something.
Mm-hmm. Yeah, you started to say
I have like an exit plan. I'm not going to hold this when I'm retired. It's gonna, yeah, I'm going to slowly exit it, probably like over 10 years, let's say. So I haven't thought it through all the way, but
really, you don't want the dividend growth.
I'd rather just like do an index with the funds from it. I think I think I've gotten most of the gain out of it. If I'm going to hold something now for like the next 20 years, I'd be more interested in like Tractor Supply or something like that. I think company's still growing. Like
someone presents this question to you: why not sell covered calls?
I've done it like twice on McDonald's before, and the premium generation is exactly how you think it would be. It's like people think like options is free money. Like the market is very good at pricing this. So McDonald's stock doesn't move really that much up and down. So the freaking premium generation is garbage. Like it's not that tempting to do it. So, and again, you're trading decision-making ability for money. I don't particularly like doing that. So.
Let me actually see. I'm gonna give everyone what the yield is, or what the premium you get right now. So if I sold, the current price is 314. Well, it fell after hours, but 300. So we'll say we're gonna do 300 is at the money. So I'll say you wanted to sell, and you want to do end of month. One contract, right? So one contract is $30,000 in value of a position. Oh, I guess. Sorry, I don't have the prices updated because obviously 300. So this net credit is not going to be correct, because right now it's going to be calculating as if I'm doing in the money. So it's not in the money anymore. But yeah, you probably, if you somehow knew it would fall like by that much, and you want to do the Friday one, you would have gotten $1,480. But let's simulate an in the money to illustrate an example. So sorry, at the money. Apologies. So at the money, $178 for end of week, right? And then you want to do November, 500. So you want to do end of November, 850 for one contract. This assumes the current price and doesn't take into account the price falling, by the way. This all goes down, but I'm just trying to simulate like at the money.
That was at the money? Okay.
Yeah, just at the money. Now let's say you're trying to like not get these called away, right? You're gonna maybe go up a little bit and get some implication that it, does McDonald's typically go up 20% a month? So this is very unlikely. Yeah, you get nothing.
Mm-hmm.
You get nothing.
No free lunches.
You think it's done it before. Maybe you get it proper analysis. It doesn't go up 10% in a month, but it has done that before. $54. $54. Now let's say you're a baller.
You're thinking about.
Well, but what if you have 10 times that size? And instead of 30,000, you have 300,000. So 10 contracts. Well, now, Dan, you have a whopping $500. It's something, though. It is something. But off of your $300,000 position, it's like, but it's something.
I just felt like it was not worth the brain power to think about it.
We're getting questions on synthetic calls or synthetic longs or synthetic covered call. Sorry, synthetic covered call. Anyone with less than 100 million should be looking more at microcaps. In my opinion, kind of dumb to buy a $1 trillion company. Are you guys talking about something else up here? Or is it about McDonald's?
McDonald's not a $1 trillion company.
What is this? Shares your name.
Oh yeah, I've had Neil on my stream.
Yeah, you're gonna fill out all the demand.
I go eat at breakfast and I'm like, keep up the good work.
No, yeah. Granted, it is something, Ben. It is something, and well, you got to be careful though.
But the only problem, you're converting long-term capital gains to short-term. If you're going to start doing this,
I thought, isn't it if you get exercised and you still had long-term, it's fine. It's only It's
if
only
they exercise you, then but you have the premium, which will be taxed at a
the
higher
premium.
rate. Yeah.
Mm-hmm.
So you're converting some of your long-term gains to short-term when you do this options, to sell it.
But I get the premise because, like, let's say you were going to sell at 315, like you were definitely going to sell at 315. What he's making a case is like you sell a CC on it for a month out, and it's equivalent to just selling it up. So if it gets exercised up until the 315 price, that's long term, and then the premium that you got extra, that's going to be short term. Yeah. So, oh, Steve, it went bankrupt.
Did it? Oh, it did finally.
It did finally go bankrupt. Yeah. And so I have no idea how they even lasted that long. It was insane that they just kept going. But yeah, they're bankrupt. It was BurgerFi. See, there it goes. and Fuhat was so obsessed with it. Chuck Carnival at Fast Graphs. MCD has a fair value.
See, here's the like. There's no company that has the business model of McDonald's. So I would counter any comparison. You'd have to do some sort of discount, because any other fast food company you compare McDonald's to is a inferior business model. So number one. So these people, they go, if you apply like some sort of peer metric where you're applying like a certain valuation to each one, you'd have to, I think that's inaccurate. It's kind of lazy. Fast graphs guy, I think sometimes he's very obsessed with the numbers, sometimes a bit too much. But you could I don't think you could replicate McDonald's business model, even if you had unlimited money. I don't think you could at this point.
Yeah.
The standards that you'd have to have like a Ray Kroc founder, right? And I would argue he was a very unique person. So I actually had to hear the history of Ray Kroc when I got hired there in like 98. They had like videos and stuff, and you'd have to read about him. So it's kind of interesting. Talking about like his process a little bit. Oh.
Yeah, they definitely have a unique corporate culture. They have the stuff that kind of would help them stand the test of time, or have stand the test of time, because there's really, like, Burger King's not run the same way. None of the other ones are run the same way.
Burger King's a shit business. Wendy's is shit.
Chick-fil-A though.
Chick-fil-A is potentially, something that could be a peer, but but they're corporate owned, right? Or no, no, they're corporate owned, I think. Or do they franchise? Well, I don't know. They're not a
Chick-fil-A is
they're not a public company. Yeah,
they're not public, but it's franchised.
Okay.
There are limits though. Oh no, Steve, literally don't even worry about it. It was like, if you recall way back when, I put the chump change into it. It was complete speculative fun. And remember the thesis I had next to it? Remember what it was? Do you remember, Dan? I don't know if people took it that seriously, but I literally said the milkshakes are fire, or I like the milkshakes. It's like,
See, the problem is, could Chick-fil-A become a public company? Because I don't think it can. You could not be closed on Sundays if they became a public company, which means you take away what makes them so great. You could argue that it's kind of based on a certain Christian belief system. I don't know. I guess we'll find out someday if they ever try, but
yeah, I don't want to say never, but and if it did, I probably would pour a good amount of money into it. Not gonna lie. Not gonna lie.
I've gone to them, right, and you just see the mass of people that hit that place every day.
I'm a Chick-fil-A Red member.
Oh,
by the way, hope you know that. That's my flex for the night. Chick-fil-A Red member. It just means you spend a good amount of Chick-fil-A, because it's literally the probably the one fast food that I actually will go to besides Chipotle. Because I don't go to McDonald's, but I went to McDonald's when I briefly owned the stock, right? And I just was like trying to say, oh yeah, these deals are great, but it's not a fast food joint. I would go to McDonald's if Chipotle and Chick-fil-A were closed. That's when I'll go to McDonald's.
I just do breakfast. I don't do their lunch food anymore or dinner.
Yeah. So wait, let me see. Oh, Foo hats. Yes, but it's all relative size. But I get it for you, Foo hat. It's a good amount. Best Five Guys if it's like $12 for a burger. SoFi opening a burger joint with no brick and mortar. Oh, and Foo hat, the number is a little bit off, but yeah, you're not too far off of it. Sonder by far and away, that's the biggest one. That'll be the one that goes in infamy as a more serious one, but even then, it really didn't do a dent to us, which is the crazy part. But
it was such a good year till that.
Dude, we were well, I was up like
we're unbeatable until that, and then it's like the market humbles you a bit every once in a while. So
yeah, over 100% year to date, right up until that fucking play, and now I'm up in the 80s. We recovered a bit since then because Meta has really pulled through, but yeah, it was pretty crazy. They're kind of far from me. I've been to them in Dallas. I've been to each one in Dallas, but they're good. I think I like Kava actually. It's a completely different style. It's Mediterranean, so I really like their bowls. But yeah, that's Heresy Julius.
We don't have Kavas yet.
Kavas are good. It's like Chipotle, but it's Mediterranean Chipotle. So you get, I put as much, or I put a bunch of stuff in, but you can get the lamb. Lamb's really good. Yeah, no, I like all that stuff, but Chipotle is still just like, Chipotle just hits the spot, and it's closer. So, other than that, was there any other stocks we wanted to cover? I think we covered pretty much everything. Oh, I guess I can ask you this because maybe the audience is curious. How do you feel about big tech? Completely, no one talks about it. Oh, we can talk about TLN.
I know I look for I want to do more military investments. Just I don't know, nothing. It's so hard right now. Everything's so expensive.
It's run up. But
everything that I like is run up. Like lots of my stuff is all-time highs. Like I've just been hoarding cash and like the last few months.
Dan, what about TLN though?
I like it. Wait,
yeah, we can talk about it publicly. I already mentioned it 2 live streams ago, so it's a public thing. For full disclosure, just to get the disclosure out of the way, I am long TLN. I have contracts. I actually have both sides of the trade, not in that I bought puts, but I sold puts, or I have sold puts, and I have purchased contracts. So we got that out of the way. I can share strikes and durations. Let me share quickly strikes and durations for the complete disclosure. So for the puts, I have varying puts that are sold at an expiration of, I believe, March. I could check my broker real quick, but it's March and December of next year. And then I have purchased leaps only, so no shorter duration, leaps only for December of next year. So that's disclosure out of the way. Do you currently hold a position?
No, I want to. I've been watching it this week. So I looked at it Sunday after I'd asked you a few questions, but it's so interesting because
it's
like I say, like there's not opportunities to buy stocks in nuclear power plants really.
Nope.
Most of them are just like 50, $80 billion market cap utilities own a lot of the nuclear plants in America. Southern Company already did its run up after its capex when the nuclear plant started. So it's kind of not interesting either, but like this is like it's it's 2 reactors at one site in Pennsylvania. So with some natural gas assets. But it's interesting. So what I remember this history, it was Pennsylvania Utility.
Yes.
So it got deregulated. That company became a terrible failure. They took on a shitload of debt like utilities do. All utilities do this, right? Because they don't have growth prospects. So they start taking out debt to, do dividends and pay, share buyback. And then I guess they got too far into it, right? And then there was like a drop in rates, and then they couldn't handle it, I think.
It was exactly what you kind of said. There was over leveraged, and they found themselves a rock in a hard place. Died.
Yeah.
Went bankrupt. Yep.
Like all utilities do buy debt for the most part. Yeah. So then they revived this thing as Talon, and now it's like perfect timing for this thing to have come back. So
perfect timing, very low leverage relative to peers. Yes, highly valuable assets. And then you kind of there's different ways of looking at it, but kind of the story goes here, it's trading. You don't see it now, but like this was OTC. I was trading in the OTC, and then it gets uplisted, no longer an OTC, but still doesn't really have too much institutional interest. It's just uplisted, and then eventually starts getting discovered. And then the multiple starts going from something that's like stupidly unreasonable to something more reasonable, and still kind of debatably too low. And then very likely it gets acquired. So
at this point, that's the whole, because there's really no other prospects for nuclear plants being acquired. Like was it Vista? Is it Vista or Vistry?
I just say VST, but
they all sound the same.
It's Vistra.
Yeah. And then Southern Company has one and or two, and Constellation's out there. So you're not going to arbitrage these massive companies. So this is like you're one of the only shots. So I guess what so Talon could get a contract, right, to sell the data centers,
which they already have one.
They already have one. Maybe they get another.
That's exactly the bull case.
So a few, or they get bought out
by
one of the big boys in the area. Constellation's right there. So
yeah. Wow. And with Talon Energy, there's there's a lot of like still prospects, even if they don't get bought out. So like you mentioned, the contracts that they're signing with various hyperscalers and data centers. If that actually pans out, because they have a complaint against them by the other regulated utilities saying they can't do that, but I think that's a low risk. We'll see how that kind of sells out, maybe Q1 of next year. We also have the auction in the summer. The auction data we were supposed to know what the auction results were by December, because that's when it was supposed to be. They postponed it because of the complaints. So now it's going to happen in the summer of 2025. And speculations from, you can read the Morgan Stanley paper, not paper, but their prediction that based off of retirements for power plants and the incremental increase in demand, it could peak out at $600 versus where it was at before at like $200 or so dollars. And then it looks like the economic requirement to bring a new plant online is like $315. So right now it stands in like the 200s as it currently is, mid 200s. So then the expectation it's going to peak out at something crazy, but then more power plants are going to come back online, and then it's going to normalize later down the road. But in the short term, that could be very bullish, like as like a sentiment catalyst for something like a Talon. But then in which case, either way, that's still my exit because the way I'm positioned. Or if they get acquired, then there's also my exit in my position. So
I
think it's more likely.
I looked at the capacity because I was like, how big is this nuclear plant compared to the one that was just built by Southern Company? So it's like 2/3 the capacity of the new one that just got built.
Yeah. If you wanted to replicate exactly their assets, it would cost roughly 20 some odd $billion, and being very generous, 6 years. That's extremely generous. Good luck. Or you could just buy up their asset. And someone else brought up the very good point to me that what is the life cycle of these assets? Traditionally or originally they were built to last 30 to 40 years. But now all of them are lasting 60 plus years. And then now we're finding out there's potential that they're going to last 80 plus years, given proper maintenance, CapEx, etc. So, yeah, it really does depend on how you're kind of evaluating this company. There's the replacement value. There's like the cash flows, which the cash flows are robust and growing, and they plan on doing a lot of buybacks. I think that based off of management's behavior with the buybacks and the lack of leverage, you probably have whatchamacallit, a lot of signs that they are looking to get acquired, because the lack of leverage gives the opportunity to whoever acquires them to lever up these assets, which are quite easy to lever up. So, you have a CEG come in and buy them up, and then you get someone like them with a even better credit rating, more established credit rating, and then they can actually lever up those same assets and get a lot of value out of it. That lowers the acquisition cost. And then you don't even have to go through them. Also to consider private equity firms that might also look at this. You listen to Blackstone, what they're saying about this sector. I mean, someone like a Blackstone could easily come in and swallow this up. So Fablio's a major capper for real. I'm reading the comments now. Oh, you're saying for me to show my returns? You can just go in the club and see the returns, or just refer to the updated ones. So I've already updated it before. I have it on Twitter. I'll be doing one at end of year publicly. And then thought solar was cheaper than nuclear. I think the problem is storage. Yeah, storage for solar. So, oh, Dan, your mic.
Out there, I hit the mute button. I don't. I get where people are thinking like solar's the future, right? It's free, it's sun, and you just put panels out and it produces electricity. But it's like in the real world, these systems take up a lot of land, so the energy production per space is pretty crappy. You can't produce anything at night. There's no storage for the production during the day. What we're finding too is a lot of these commercial projects, they do them for tax incentives and they do them for optics. I think I don't think they actually benefit the company per se, like lower utility costs. I think they're doing it because they have a agenda at the company, and then the government is pushing tax incentives. And then the residential solar is a disaster, These all like a lot of these companies are going bankrupt. That business just doesn't make sense in a lot of different macro environments. So there's just better, like, a lot of people threw away nuclear as an option for decarbonized world because they had fears of nuclear meltdowns like Fukushima, which was like, that was, I mean, that was a disaster, no doubt. I don't know. And then also, did you hear what happened? Like solar wind, they have these ocean solar farm or windmills. They were going to build all these windmills out in the ocean. Extremely expensive, over budget. They also had ecological problems where like whales were like beaching themselves near them and they couldn't figure out what was going on. So these green projects aren't what people think they are, I think. But there's other problems. Like solar works in certain parts of the country, I think. And like, I know some economists have covered this, like the cost of the panel compared to the production of the panel, it only really makes sense in like very specific parts of the country to put solar panels. For like the actual energy production to make that panel, like you need to put it in like deserts with high elevations. Like Andrew should be surrounded by solar panels. But like in the parts of the country where there are high energy costs that would make these systems make sense, they're also more northern climates that don't get direct sunlight. So it's kind of this weird relationship. But I don't know. That's why solar is becoming the answer, I think, now. It always made sense is probably the answer, right? Nuclear was always the answer.
It was, and we're finally just getting back to it. Yeah, we got the 3 Mile Island reboot.
That should have never closed. And that's up near me.
You know why it closed?
I think it's just political pressure, wasn't it?
Yeah, and then, well, no, the second one closed because of the economics. That's all. They just wanted to keep it because at the time the price for the energy was just not worth it for the cost to keep it up and running, so and maintain it. But yeah, you
can see Enphase, even that darling of all those solar YouTube or the YouTubers loved Enphase. It's crashing too.
Yeah. I don't know if there's any other questions on Talon. Do you have anything else to add on Talon?
No, I'm watching it. If any dips, I want to. So it's on the board.
Yeah, I'm probably going to continue to purchase occasionally a contract here and there, but I think I'm done with the adding to that position. So,
but I have an idea, like if it gets acquired, how much I think it's going to get acquired for. So, I mean, by that standard, I should probably just buy it. But I don't know. I'm not there yet.
Citizen of the Year.
Oh God.
All right. I can probably, if the other gentleman is still in the chat, I can probably log into my broker and pull up the returns if he really wants it right now. I just got to take some time, but let me know if you're still in the chat. I can just pull it up. If you want a dollar figures, you'll have to go in the club, but I'll give you the percentages. You just have to respond again, and I'll go ahead and log in because we have time. You know, we're not too late. I was going to do one towards the end of the year. I think right now, well, it's still, I'd say it's still pretty impressive, but the box spread with the with rates change is kind of like depending on like the close of the date of the week, it's kind of being a handicap right now, but it's still quite impressive. All right. Sounds good. Well, I'll start with like year to date and then since inception of the holding company. So Here, I'll do it this way, so don't have to do any block out of dollar figures. Again, if you want dollar figures, you have to go in the club. Can't really help you out there more. All right, you probably will recognize the broker maybe if you use this broker, but here, I'm gonna just send it to Dan, and then I'll, again, still kind of impressive, I think, at least, but it should be a bit higher depending on when the options reprice. So share this tab instead. So that's the year to date. Again, in the club, I'll show like a more, you know, because you'll see the dollar figures. I just don't want to block out the dollar figures and stuff. It's just easier to take a quick snapshot. And then I probably want, since the inception, so since we started at Capital Mindset. And if you can't tell, this broker is Merrill Edge. So sorry, Dan, I'm just sending it to you because then I can open it in browser. I do the snipping tool and then I just send it to you and then I can open in browser. So it's easier and quicker. And then there's since inception. So CM, or the holding co, started when we started Capital Mindset effectively. It's kind of like an experiment, not experiment, but a way to reestablish track record publicly. So I update the holding co to all the club members each and every time there's like a material impact or material update. And the idea is long only, well, not long only, but fully invested always. So I don't try to keep cash. It is long short, so I occasionally do short, but most of the time I'm mostly just long. So, and then the CAGR, because I guess that's also, I got to scroll down here. So time weighted CAGR. Again, remember, and this part, you can just take this one as the, oh, actually, no, this one actually still has the correct recorded. So, give me a little bit longer because I will be, let me block out the dollar figure. So I have to, because otherwise I don't want to describe the labels and that would be kind of annoying. Give me 1 second. So I can just put actually one big block to cover the dollar figures. Easy. All right, cool. Give me a second. All right, Dan, sending you another image. Sorry for the pain. So let me just check over real quick. Yeah, there's no dollar figures. All right, cool. So then I mean, it's self-explanatory, but the highlight is like you can see the annualized rate of return since inception down there. It's a time weighted, and then you have entire period, 3 year, 1 year, 3 month, year to date. So, yeah. All right, so that was your request. I would normally do this at the, yes, of course, it includes options, but I would normally do this at the end of the year. But since you requested, so to speak. And that 3 month is because Sonder fucked me, okay? Fuck Sonder. That was my biggest dollar loss ever. Yeah.
If they get delisted, we got to throw a party. I will go buy a nice bottle.
This year to date was over 100%.
I'm really trying to get them delisted for the work I put in sending stuff to Marriott.
Yeah. Yeah.
Oh.
Yeah.
That's a different day for that story.
Dude, when they get clapped finally, that will just be celebration. I'm just basically now like a sideline cheerleader, just like hoping they get wrecked.
Yeah.
you know, but I don't think I'll get back into it just because like maybe I'll be too emotional. I just have in my personal things like some contracts that the October ones got, you know, wrecked. Those are dead. But the ones that are in oh, speaking of which, I have to, well, no, they'll expire worthless actually. So no, they're all the same account. If you recall, I said that the box spread, depending on what day you're looking at it, is affecting because interest rates on the longer end are going up. So it's affecting the repricing, but the box spread doesn't actually change in price. It has no effect on the account, so to speak. So because of the nature of a box spread. So, but it can change the way that the brokerage will like look at the value of it. It can fluctuate sporadically. So, but like I said, either way, I think like even with the box spread impact, you know, this image it's still pretty impressive. So I think that's what you're referring to with the second image, because this was technically the second image. Then this is like the CAGR annualized, but yeah. It's kind of like same thing happens on Fidelity, where you know, Andrew always complains about how his options repricing, the way Fidelity does it is like makes it look like, depending on when he's looking at it, he's like down a lot more than he is, or he's up a lot more. Well, I don't think they ever do the upside more than it actually is. It always just makes you look worse, which is fine. But at the end of the day, if your money's going on. No, because eventually this is definitely going to slow down, because keep in mind the impressive part, especially if you're doing 44% CAGR, is like if you're doing it with large sums of money, not with smaller sums of money. Well, I want to be not sensitive to the topic and not say I have, you know, I have a good sum, but I don't have what Charlie Munger was dealing with. So another level, right? There's always a bigger fish. So yeah. And likely that's not indicative of how I'll do next year. I could do really bad next year. Who knows? Like my top positions could get wrecked, and then 2025 is not going to be a good year. Could happen. Could happen. But I'll take the small compliment of saying from Munger, don't listen to him. He lies. There are the AUM of 100 billion. Dude, if I had AUM of 100 billion, oh my gosh. Well, we could do
Why would he be doing YouTube?
Yeah. Well, maybe I still would because it's fun, but you know, hey. So, yeah, I'll do like a more extensive update end of year, because that's usually how I've been following it. I try to do it like a quarterly. On a public side, I do quarterly. On the private side, in the club, I do a bit more frequently. At least the portfolio updates on holdings is fairly frequent.
Ooh, Howell asked a.
Where's Howell's question?
Boeing.
Let's talk about Boeing. That's a good topic too.
So I did buy Boeing at like 154, and then I thought it was the bottom. Like I didn't think it'd get any worse, but then they decided to take the health insurance away from the freaking striking machinists. And that just really pissed me off. So I sold. I didn't want to be part of this company anymore. But if I take my union flag away, it's an interesting opportunity. I think at this point, possibly this could be the bottom. There's a union apparently there's an agreement tentatively they're going to vote on. I think it's tomorrow or Thursday before earnings. So, but then they had a satellite just explode. So just when you think it can't get any worse,
dude, they have something.
Don't ever say this is the bottom. Like we can't think this. We don't know.
Someone is not looking up.
Shit can just blow up or catch fire with this company at any point. So, man, I don't know. It's just like it's going to be years and years to fix this, and they still have to buy that fuselage company, which they're going to have to pay with something other than cash because they don't have the cash to buy it. So,
yep,
there's some hard times ahead.
So what you're saying is a prospective investor in Boeing should just be weary. I think there's alternatives I want to provide to Boeing, but we'll finish this topic.
Yeah, so they're going to have the new machinist contract, I guess, more. I just briefly looked at it. So more benefits, pay raise. So they're going to get, their margin. So more expenses. But I would argue they just need to get on track with producing planes. I don't think their number one priority is like efficiencies at this point. But man, I don't know. This is tough. It might just float around this price for the next 3-4 years until they figure things out. Or the market could reward a good piece of news. It could go up to 200. But I know certain people are selling puts on it, which is interesting. I don't think it's a terrible approach to this, actually. So
I haven't even looked at what the puts are even yielding, but I sold puts on Applied Materials. But we'll maybe we get into that. I don't know. We're running on 2 hours, but I have infinite energy, man. I'm like, once you get me wired up for this stuff. But
I feel so inadequate on fab equipment. I know one.
Oh, dude, I'm inadequate too. I'm not an engineer. I'm not an engineer. That's space. I'm just basically regurgitating things I learned from others. But there are alternatives to Boeing, though. Have you heard Parker Hannifin, for example? Supplier.
Yes.
I think they're a great co.
All of those have done really well the last year. The suppliers, they're all like up 50-60%. Like
they're the winners. These guys, I don't know how Airbus is fumbling the bag. Their moment that their competitor just like drops dead. Boeing just is dropping dead. So like they're in the process of dropping dead. And that's it, right? There's just them. So then you have the suppliers that they're all just like, wow, wait, there are issues? What are you talking about? Issues. Every day is a new happy day. So you have that going for you. And I mean, Parker Hannifin, another kind of serial acquirer. Jake, are you in chat? I see what you sent me. I just got my notification on my phone. I mean, not my phone, so Jake just sends me a meme in the middle of live. Yeah, I just called you out. How's it feel? Okay. So yeah, Parker Hannifin. There's a few suppliers. Oh, God, I'm misremembering some of them. There's another really big one. I think an international company that also is a parts supplier.
Woodward. Well, they're not a traditional supplier.
Sure.
You mentioned to me once you wanted to invest in hypersonic missiles.
Oh, but yeah, they got taken away. But that was the play that they would get acquired.
The one true pure investment in that space. The company's just really expensive, but they do also plane parts along with that.
Oh, it's not AGRD because AGRD got acquired from me. Yeah. Because that was a company similar to Talon, where it's like a similar play where I suspect Talon's going to get acquired. I suspected AGRD was going to get acquired. We can get into why. I mean, it felt like fairly obvious at the time. It did. And when they got denied from Lockheed Martin, I knew someone was going to come after them because it was from a larger player swallowing a smaller one. It was obvious because there was an asset they had similar to how Talon you could lever up, right? You could re-leverage them. Because of the asset they have and the under leverage that they're in right now. AGRD had an asset that if you could monetize that asset, i.e. sell it or do a third-party project, you could reduce the cost of the deal by a significant amount and basically made AGRD an easy buy, right? From someone who wants to buy the whole company. And so it made sense from the acquisition standpoint. And Lockheed Martin, the CEO at the time, or who had just taken the position, came from a REIT. So he saw exactly what I could see. And he's an expert at that stuff. So exactly what he wanted to do with them, because he came from American Tower. And he's just like, oh, they have all this real estate that we could monetize and make the deal look a lot cheaper. So, of course, let's buy it. We could get access to their tech. They got denied. So, but then L3 Harris came in with presumably the same capabilities and foresight to see what they could do with that. So AGRD was like a easy, let's say, speculation on them getting acquired. But what was it? Activision Blizzard. That came out of nowhere. that came out of nowhere. That was the days. Man, you realize how time went by so fast already. It feels like yesterday they got acquired. So, all right. You have any other? Is there any questions else than that?
No. I really want to I was looking for more drone investments, but nothing. I'm not really like, if I don't find anything, so be it. Just kind of looking for interesting things right now. But a lot of these investment ideas and capital mindset right now, I'm not a PE financial insurance type of guy, but people thinking outside the box is fine. So
yeah. He bought at much higher prices. Oxy. Any thoughts on oil? I guess oil is in general.
I think natural gas prices have cratered. I don't know.
But it's funny because like the natural gas players also they've ran up a lot because there's anticipation that there's going to be that export market, and then the price is going to kind of meet down the middle of international versus domestic. So they've also ran, but there are some that haven't. Those will be interesting to see how it plays out. Do you have TSM or anything like that?
No, just KLA.
KLA, man. Well, we have that individual who's just telling us, hey, KLA, they're unbeatable. Guy's been holding out on us, which is 18 years semiconductor experience. Oh, TPL. Look at this. Look at this, like, multiple expansion galore, bro. Like, what?
The fuck?
Yeah. Like, what?
What is this?
So all the effort I put in, and I could have just bought this. And just like, haha, YOLO.
What do they do?
Oh, this is Texas Pacific Land Corp. They literally just own land and they collect royalties, and then they have a water supply business. So when they're doing the fracking, they supply the water. So they have these additional services, and they're trying to figure out other ways to monetize land. But basically, in short, they own land, a lot of it.
Wow.
And they collect royalties. This used to be an MLP way back in the day, and like literally around here. And they switched over to a C Corp, which changed both the tax structure, right? And what you'd get, you wouldn't get a K1 anymore. So it opens them up to different investors. Of course, by the way, this is like back in the day over here, they owned a bunch of land that they had no idea what the value was.
Oh my God.
They were just a trust with a bunch of land. So literally, imagine you holding it and it goes nowhere for a long time.
You get it from your grandpa and you look at it and it's just shit. You just sell it.
Yeah, you just sell it. No, because it literally did nothing for a while. And then they discovered that there were a lot of resources on their land. So then you get, a bunch of interest, and you get royalty incomes, and then they start the structure as an MLP, right? Master Limited Partnership. Or they don't start, but they were one. So you're getting your dividend, you're getting your basis reduced, etc. Blah, 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 blah. But yeah, the switch really gives you that extra multiple boost, like a multiple rate that happened here. And that's the story.
Whoa, wait. Pull up Rob's comment before we end it. Okay. Kingdom was a fan of KLA because he heard it from me. So I'm just saying there was no Kingdom KLA. I told him about my investment and then he started yapping about it. So no.
He didn't cite the author?
Yeah, pretty much.
Damn, man. Damn. Didn't cite the source. Yeah, no. KLA's. I
mean, in hindsight, I was thinking of Lamb Research or KLA, and I picked KLA. So in hindsight, I picked the wrong one, but I feel better long term about this.
Wait, Lamb Research outperformed KLA?
Yeah, by a pretty good amount. Last time.
What?
Yeah. when I was looking. So I looked. So if you go from like the summer of 22, which is when I got into it, but
Wait. Oh, sorry. What? All right, hold on. Let me. Oh, I guess from the summer of 22.
yeah. Wait,
See, I can't drag.
oh, maybe I was thinking something else.
Yeah, I was like, KLA is insane. Yeah, I don't think
Oh, I
so.
must have thought. What am I thinking of?
Nvidia. That one.
I must think of something else. I thought.
TSM?
You know, never mind. So
Maybe TSM.
I got into it at like 3. It's like I got 360, 370. So
It could be that you're thinking of TSM.
maybe I'm thinking of something outran it, but
Not ASML.
no.
ASML is getting back down there.
The KLA is nice because anybody that makes equipment, like, they benefit from, or like you don't have to pick a winner with them. They just service the entire equipment industry. But
I mean, that's kind of the attraction for all the equipment plays, and they have 90% plus market share in some cases.
And I was hoping they would keep their double-digit dividend. It was a dividend investment. You like that?
Oh, wow. Well,
Their 5-year CAGR on their dividend was like, I think it was like 18-20% at the time. So
here's my dividend. Yeah. Well, I'm kind of eyeing a lot of Applied right now, so that's why I'm selling puts on Applied. But I'm playing maybe a bit more interestingly than what people might think when they sell puts, right? So, ooh, very interesting question just came through. I'm 23 and I have all my savings in 20 stocks, no funds, 37K US. I'm from Sweden. Am I dumb? Well, you're not dumb, because I actually know something from other Swedes in the club that you guys punish ETFs.
Yeah, we know. I was about to say you have no choice. So
yeah, you're not dumb. You have no choice but to do 20 stocks or whatever stocks. So no, you're not dumb.
I know one guy told me his base was like Berkshire or something, because it was like, it's like an ETF, right? So he's not getting punished. But yeah, you guys are in a tough place.
Yeah, really tough.
No easy answers.
No, I know, Patrick, but how do I say? Like, if you were to buy like a VU, right, an S&P 500, where you get a low cost index fund approach. Yeah, all the Swedes have told me they can't do that. I've received the question from them before. It's like, oh, I can't do this. How do I replicate, like a market exposure? It's like a really tough thing to answer. But I would have to probably know. See, okay, now I'm gonna have to talk to these Swedes, because now you're telling me index funds are very popular. There are some that have zero cost. Am I thinking of
the
the wrong
opposite of what we were told?
Yeah, what the hell? Am I crazy?
We were told they can't buy US index funds. Like, it's very cost prohibitive. God, make up your mind.
All right, well, now I have to reorganize my thought process, because I thought something else. Or maybe I'm thinking of a different country in Scandinavia, and it's not Sweden. I thought it was Sweden.
Okay, so if it's not cost prohibitive, you are dumb, I think. There you go. I think you should have a core holding of an ETF. Now he's gonna cry.
No, well, I don't know what the stocks are. What if they're absolute bangers? I have no idea, man. So
I think you should be like 50% like the S&P or something, and then have fun. But
it could be that you might have some distractions in there. Here's the thing, right? This is a philosophical question for investing, Dan. I don't know if it matters or doesn't matter. So let's say the larger your portfolio gets, do you justify having or would you justify having a 0.5% position? Let's say you're not investing on behalf of other people. So you're not investing on this big pie. This is all your money. It's all 100% your money. Would you justify having like a 0.5% position in a stock, knowing that the nominal amount will be significant if it 5x's, right? You can think of it like, oh, I'm going to go spend that money on a vacation or whatever, or buy a nice car. Or do you not care and you say, no, it's always strictly about the percentages and that's a distraction in my portfolio? Or would you justify holding that position? Let's assume great company, et cetera, blah, 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 but you only have 0.5% in it. Or would you sell it and then reallocate it to bigger ideas?
You're saying it's not worth your brain power to even think about it because it can't return an amount that's really significant.
No. But what if the return amount is significant dollar figure wise, nominal, but percentage? Like, let's say you're moving a lot of money. Like, you have a lot of money. I'm going to give you some figures, right? Let's say, I don't know what the total amount is, but let's say this position here, if it does really well, it's 0.5% of your portfolio, but you stand to make hundreds of thousands of dollars. But your overall portfolio, because you're a baller, you have tons of money. It would be percentage-wise insignificant. Do you justify those positions, or do you sell them and put it up? I had this conversation with someone the other day. I'm just curious what.
No, I would keep it. I wouldn't get rid of it just based on a percentage idea.
I'm in your camp.
My thought is just like, the whole point, if you're going to speculate on something small like that, then you're trying to get an outsized return anyways. So
yeah, like you're still focusing your main ideas into what's going to carry you over, what you think is going to carry over the performance, but you have this other idea. Maybe you have an affinity to this company.
You're describing my drone company.
Yeah. Okay.
This is literally what I did. It was very small percentage and it outsized returned. I think I 6 or 7x'd on it. So yeah, but it's a small idea because it's very, very risky. Company could have just disappeared. I would have never increased the size of that position much more than what I had. But.
Yeah. This is a great point here, by the way, of Patrick. He's not making this point, but I'm going to make the point from his point. So it's like, this is where we're trapped. Trapped sounds like it's bad. I'm trying to make a neutral point on this, but we have like a US centric view, right, of a lot of things, because the US market is very large. It makes up the majority of the world's market, et cetera. So I've always wondered, right? It's a question that doesn't really have a definitive answer. I don't think it has a definitive answer. That's how I feel about it.
I'm
right?
pretty sure he's underweighted carrier. I'm disappointed.
Wait, and Patrick, you're just giving me energy to keep going because I have questions now for you. So it's like sparking my brain. I have questions like what Swedish stocks you are, because I'm curious if one of them is Evolution Gaming. Go ahead and answer that question. Is it Evolution Gaming? Just curious. Is one of them. And then, wait, no, Adyen is not. Is Adyen Swedish or is it from Holland? Is it Dutch or is it Swede? I forget. I know Evolution is Swede. Yeah, go ahead and answer if you own Evolution. I'm just curious if that's part of that 50%.
Yes.
Here you go. Yeah, it's very popular. Oh. Yeah. That one has been of occasional debate in this Capital Mindset Club. It was brought to us by actually someone from Europe. I think they live in Netherlands, if I remember correctly, and they actually work in the industry, not in Evolution's industry, in the investing industry, and they've actually brought some very interesting names in the past. And so they brought up this name, And that's when I first learned about it. And yeah, it looks like the margin profile looks really good. The internal return metrics look really good. Upon further investigation, like, of course, there's the issues with Georgia, right? The Georgia labor issues, the country, not the state, for U.S. Viewers. And, you know, there's the question of the unregulated markets. What's going to happen with that as they either regulate, and or there's also the question about concentration of customers as we kind of start to get. I'm not showing anything. No. I mean, I'm not showing anything besides KLA. Do you want me to? Oh, okay. I'll show Evolve. There we go. And so I think like each time it keeps ticking down, I'm getting, like, I see it working out is the thing, but I haven't pulled the trigger yet. I think I owned it for what, like 3 days before I got out. Because I needed to make up my mind on it. I bought it literally around here-ish. I don't know, somewhere around there. But I don't own any right now. And it was a small amount because I was kind of trying to get an idea of the stock. And I was like, there's other things I want to focus on. But I keep getting drawn back to it. And I haven't made my mind yet. So I'm wondering, well, this is a tougher time to have a conversation because you're doing it over text and there's like a delay between us. But I'd wonder how you feel about it, if you could share in a short blip, if you think the Georgia labor is an issue, because that's usually what I'm kind of trying to get past. If they can circumnavigate that and get labor sorted out elsewhere, because that was one of their big hurdles for growth, is getting more supply up and running via labor, because they need more people doing like the card stuff, you know. So, yeah.
God.
What happened? Are we getting added by Fuhat?
No.
I'm getting added. I don't know why. Who's adding me? Oh. Wait, no. Never mind. I thought someone gave me the Netflix chart in the club. No, Nash is cracking me up. He just said, "Why own any semi stock instead of Nvidia?"
I know he's called me to defend my AMD honor.
Yeah. At this point, though, like, I'm just being stubborn with him not buying Nvidia. I'm just like, fuck you. I'm trying to fulfill the prophecy that when I buy Nvidia, finally, it's the top and it's gonna crash. Yeah. So I'm just like stubborn. I could have added any time that he told me in the past 2 years to buy Nvidia, and you know, it's just like me completely missing the ball there. And it would have been contributive to my performance, not a detractor. So definitely. All right. All right. I think we covered everything. We're over 2 hours.
Yep.
All right. With that being said, everyone, thank you guys so much for joining us in today. Dan, channel, shout it out.
I kind of want to change the name of it, actually. I'm not sure.
Dividend.
I can't do that one because the algorithm keeps trying to correct it. I don't know. I feel like I'm gonna change it.
Retire with Dan. No.
Maybe something beach related.
If your content is more finance focused, you got to give it a finance flair.
I know.
Money flair.
I know.
Dollar Dan.
Yeah, I got that. Something will come out.
Yeah, something
Dan
like
the
that.
Dividend Man.
All right, so
Tell me about it.
But everyone check out Dan Weston's channel. Literally Dan Weston, right? That's how you spell it. Dan Weston. And if you guys are curious, link in the description shows you the club. If you're interested in joining that. Other than that, I'll see you guys on the next one, whether I finally start getting those videos out, like I said, which I'm going to try a new strategy to kind of kill two birds with one stone, or we'll see each other in the next live stream. And but feel free to leave a like, subscribe if you're not subscribed, heart it on Twitter, retweet it if you want to. And if you're on Twitch, whatever it is they do over there, go ahead, you can do it. Oh my gosh. Finance with Daniel. See, that is one of the greatest inside jokes ever. The Daniel and Dabio. For anyone who doesn't know, you got to see the photos of the meme. It's too good.
It's a
I'm just thinking of the photo now. Daniel.
I can't do that. People know me, watch my channel. They're gonna be like, what the fuck is this?
Who's Faniel? What is Faniel? And then your thumbnail has to be Faniel. On your thumbnail, you have.
If I change that, I don't think I showed my wife that photo.
You got to show her that photo. You got to show her that photo. Thinks. I show my girlfriend the other photo.
We didn't make any of those for people in CM.
No.
It was Bobo.
Yeah. Yeah.
So
I love the organic memes that just form. It's like its own meme culture.
Yeah.
All right. With that being said, guys, thank you guys so much for joining us in today. And I'll leave you guys with the classic O'Reilly outro.
Okay. We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.